Good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Tuesday, and it's January 22nd. Hope you guys had a nice long weekend here. Kind of to get back into the swing of things, we only got one report today on the economic calendar, and that is existing home sales for the month of December. So in November, we had 5.32 million on an annualized basis here, units to be sold. And forecast is supposed to show a drop down to 5.1, and it dropped a little bit further down to 4.99. Now, a lot of this would probably be attributed to the higher rates during the fourth quarter. So, if you recall, around October, rates were climbing upwards, and we were kind of at the highest point of the year. And then towards the latter part of December, things start coming down a little bit. Rates start dropping a bit, and things are starting to pick up now. But things kind of got slower during that period, which a lot of it was attributed again to the higher rates. Also, we had, if you remember, back in December, that was the beginning of the government shutdown. So there might have been some delays in terms of the flood insurance and stuff like that that they may need from the government to be able to process loans and stuff for these folks who are buying homes here. So again, I think you're going to see this number probably improve a little bit, probably in the first quarter here. But as of right now, yeah, it looks like it's a little bit slower than what we probably should have. Probably you're going to look at February because some things will start in January and probably close up in February. I think you'll start seeing some better numbers coming February than what we saw here. I think it will probably have a pretty good spring here, at least what I'm seeing on a micro level here in the U.S. So headline news, stock market is down a little bit. We do got Q4 earnings reports. This will be the second week going into it. Those aren't really making the major headlines. The major headlines are more influencing our comments by the IMF. They basically reforecasted their earlier reports from October when they showed the world economy growing about 3.7%. Now they've reduced it down to 3.5. So I think things are going to slow down here. And then, of course, China basically came out with some data that are showing them probably the slowest they've been in like 3 decades here, over 30 years, like 6.6% growth, and that's not looking too well. And as a result of that, there was a cabinet meeting between the President Jinping and the rest of the party regards to this and warning of dangers ahead for the economic slowdown here. So they're obviously taking it very seriously. Another thing that could interrupt the negotiations between the U.S. and China is there's reports that maybe the U.S. may give a formal extradition report to Canada to send over the CFO of Hawaii. I'm not sure how that's pronounced, Hawaii, over here for lying about them doing business with Iran, which is against the sanctions. And that could, again, interrupt negotiations as well. So, again, we'll have to kind of wait and see how that plays out, but that is a possibility. So let's see how this is affecting the bond market. Bond market is looking quite nice. We got very fortunate on Friday. We were testing the 25-day moving average. We had a pricing for the worst as it dropped earlier in the day, early in the morning. And then we stopped right here at that line. Today we're kind of testing both sides. We're kind of this kind of a narrow pattern here between the 25-day and the ceiling of resistance, this Fibonacci level here that we broke through like last Thursday. And as you can see here, we're kind of breaking through. So we're up about 13 basis points, which is a good sign. We do have improvement in rates where we left off on Friday. So rates will be slightly better today as a result. And then on top of it, we are testing the 25-day moving average. So kind of like what we did with the 25-day on the MBS, we broke above it and then stopped above it. So now we're the 10-year Treasury is right now right on that level here, 25-day moving average. Now, if it could break below it, obviously we've got a lot of room here that could help mortgage-backed securities. Kind of the same. Oops, sorry about that. Kind of the same way. If we could break above this, we have a lot of room here and get better pricing here. So we'll have to kind of keep our eyes on this as a result of this. Now, what's going to dictate this is really stocks. Stocks have been taking off quite a bit, taking a lot of the money out of the mortgage-backed securities investments, and that's why mortgage-backed securities have been dropping lower and thus raising interest rates. That's why the stock market has been pretty hot. But if stock market continues that heat up, it's going to make rates go up much higher. All right, so that pretty much wraps things up. Interest rates, good news is interest rates have a slight improvement today, which is obviously good news. But if you guys want to get any further updates, if we post anything, just go ahead and follow me at Twitter. That's where I'll be posting any updates after this video here. You guys have a great rest of your day. Thanks so much for watching. I look forward to see you guys tomorrow. Bye-bye.